Hey guys, what's going on? Sorry about that. As you can see, we're not using the usual camera. I have no idea what is going on, but yeah, having some camera issues. It's weird. It's connecting, like it's connected through this. Let me see if I can show you guys. It's through this. Bear with me. This thing right here. It's called a Elgato Cam Link, and it just plugs via HDMI. I'm looking at here. It just plugs via HDMI right into my computer or to my camera and computer. And I have no idea why it's not working. It's showing that it's connected to the camera, but anyway, little technical difficulties tonight. I apologize for the delay, but I mean, the show must go on, right? And I am so stoked to be back with you guys for another Dividend Happy Hour. Happy Friday, my friends. So good to see you guys. I hope everyone had a great week. You know, kind of some red this week, definitely today. I think this was, well, we can take a look at it in just a few moments, but I think this was like my worst day in the portfolio in a long time. I was down about 0.9%. I think it was down about $700 just today. And it happened like at the end of like towards the market close. I have no idea what caused the drop, but realty income like took quite the hit towards the end of the day. So kind of an interesting day, interesting week, but if it keeps going, maybe we'll see some good discounts. So that is the silver lining. But nonetheless, guys, once again, I hope you all had a fantastic week. And I'm happy to be here with you. And I'm fortunate that you decided to spend this time with me. We'll go for an hour or so. The wife's working a little bit late tonight, so we could probably stretch it a little bit past 6 p.m., but not too far because I gotta make dinner. But yeah, why don't we get into it, guys? Why don't we kick this thing off the best way we know how? So grab whatever it is you're sipping on, and real quick, let me show you who we got right over here. My supervisor, you see him right there, just hanging out. But yeah, grab whatever it is you're sipping on tonight, guys. Let me crack this bad boy open, and let's cheers to a couple things. First and foremost, here's to you guys. Thanks for tuning in and hanging out with me tonight. And also here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow. And here's to the pursuit of financial freedom, because that's really what we're all after at the end of the day. And that's what's bringing us together tonight. But anyway, more than anything, here's to you guys. Cheers. Ooh, so good. I'm out of Fresca tonight, so I had to opt for a little Minute Maid Zero Sugar. Equally as delicious, not nearly as carbonated, but it's okay. But let me know a few things here in the live chat, my friends. Number one, I want to know, what did you guys buy this week? Which stocks did you add to your portfolio? What did you add to? Let me know that in the chat. That's number one. Number two, I want to know what you're sipping on tonight. What did you bring to drink to the Dividend Happy Hour, episode 114, which is crazy. So let me know that as well. And number three, did anything cool happen in your guys' portfolio this week? Did you hit any new milestones? I'm guessing we're not going to see many, if any, all-time highs this week, but maybe you got your 100th share of SCHD finally, or maybe you hit a new dividend income record, or anything like that. Anything cool that happened to you guys in the portfolio this week or outside of the portfolio? Life stuff. How's life going for you guys? Anything happening, and anything good happening for you guys outside of the portfolios? You can share that as well. We're all friends here. What else? Number four, I want to know as well, do we have any first timers here in the Dividend Happy Hour? Let us know here in the live chat if this is your first time tuning in to the live stream. And in case it is, usually, which is very cool, usually we'll have at least one or two first timers in the live stream every week, which is, once again, so cool to see. But in case this is your first time, the Dividend Happy Hour is going down every single week, every Friday night, starting at 5 p.m. Pacific time, 8 p.m. Eastern time, unless for some reason, like I'm out of town, or for some other reason can't make it. But either way, I'll let you know. But yeah, otherwise, normal week, we're doing this Friday nights, 5 p.m. Be there or be square. And I know it's not like a huge deal to you guys, but I can't tell you how much it bothers me to not have this camera going right now. It just, to me, it makes such a difference. Once again, I know for you guys, it's not as big of a deal, and it really doesn't matter in the grand scheme of things. But like inside, I'm like, oh, this freaking thing. Don't know why it's not working, but like I said, the show must go on. As far as life stuff goes, taking a step back for a minute, I do have a few cool things, I guess, yeah, a few cool things. Um, so what can I say? There's a couple things that I wanted to share. So my wife and I have officially been in our house now for like over a month. I think yesterday was the 1 month mark. It was either yesterday or it was on Monday. I don't remember if we closed on September 20th or the 24th. I think it was the 24th. I think it was the 24th. I don't know. But the 24th is also September 24th is the day that we moved into our first apartment here in Vegas. So I don't know. Maybe I'm getting my days screwed up. But nonetheless, officially been in the house for a month. It's already flown by. We got our 6-month wedding anniversary coming up on Sunday. That'll be a lot of fun. And coincidentally enough, too, the chapel that we got married at here in Vegas, they're opening a second location, and they're doing their I don't know, some sort of soft opening for it on Sunday on our 6-month anniversary. And we were invited to go to that. So we're going to go check that out on Sunday. That'll be kind of a fun little way to celebrate and go do dinner after. But what else can I tell you guys? I've been running these last few weeks. This is now week 3. I've been hitting the pavement. Today, I actually did my longest run so far. In my pace was the best ever so far since I started. I think I ran about 4.25 miles. And my pace was about 9 minutes, 25 or 26 seconds, somewhere in there. Which, like I said, the pace has been picking up. So that's good to see. But yeah, that's pretty much all I got going on this end, guys. Dropping some weight too. That running has definitely helped. So hit a new low weigh-in today. That's always fun. But let me scroll up here in the chat. I just want to see who all we got in the building. I don't even know exactly where to start here. So let's just go all the way up. I'm going to go all the way up to the very tippy top, 5 p.m. So see who we got in the building. Sorry for rambling on. Let's see. I see Chris. Chris is the first one I see there. What's up, man? Having a Wawa, or having some Wawa right now. Shamizzle's in the bizzle. What's up, Shamir? Hope you're doing well, man. I see my man, Matt B. What's up, Matt? Lost some big gains in the portfolio. I get you. My man Rise here. My computer got E. coli from Shamir's burger. That's funny. Striper Kid is here. What's up, Striper? My man Zal is here as well. What's up, Zal? I see Adon. What's up, Adon? Pat, Shannon, Steven, or Stefan, one of the two. Either way, good to see you. Let's see. Anthony's here. Teve? How do you pronounce this? I know you. I'm pretty sure. Yeah. How do you pronounce your name there? I probably butchered it, so I apologize. But yeah, let me know so I can correct myself there. But let's see. Striper, I appreciate this right here. Real quick, guys, there's 134 of us in the stream, 136 now. If you guys haven't dropped a thumbs up on the video, if you wouldn't mind doing me a quick favor and just hitting that thumbs up button real quick, that would really make a big difference, for the stream here and for the channel. So if you guys want to support the Dividend Happy Hour, a thumbs up would be delicious. So thank you in advance, and thank you for those who have hit that thumbs up button. It means a lot. Dang, that's crazy. 6 likes before it even started. Rookie numbers. Okay, so let's keep going here. I see Div. I see Alan, aka Scorpio. DGI Crab, what's going on, my friend? Who else we got? Wing Addiction, good to see you. SCHD Stan, what is going on? How you doing, Craig? Gorilla Nurse, what's happening? Good to see you. Salvatore, it's all about the Yankees tonight. What's up, man? Tony's in the building as well. Andrew, what's up, Andrew? Let's see. Let's keep going. Korean Cardboard. I don't know if I said what's up to you yet. I apologize if I didn't, but maybe I already did and forgot. But what's going on? This is a good question. Are you using StreamYard? There's a setting you can change your resolution. Yeah, it's got nothing to do with StreamYard. It has to do with my that little cam link thing that I showed you. And this is the first time I've seen the issue. So I'll figure it out though. And restarting my computer helped. But I don't know. I'll figure it out. It'll work. So let's see. Matt, what's up, Matt? Charles, what's going on? Mike picked up some UPS. Okay. There we go. Let's see. Oh, Jay picked up some Chevron. There you go. Nice. Brett. What's up, Brett? It's quite the name. Brett Leisure. Very cool. Nice little shopping spree, too. Couple ETFs, couple stocks. Good stuff. There we go. Korean Cardboard. Couple cool milestones here. I bought AbbVie, EPD, and Chevron, loading up on that income, and hit 100 shares of EPD. That's cool. Good job. Good job. Wow. Striper. Good stuff. Closing in on 140K, hit 137K today, an all-time high. So good job. You must have had you must have been in the green today in your portfolio then. Nice. There we go. Anthony's got a cool little milestone here. 7K in the portfolio after 16 months. Good job, my friend. Very impressive. Keep it up. Let's see. Ooh, Div Sith. Little icon. Anyway. Icon Enterprises and some Verizon. I gotta say, I'm not the biggest fan of IEP. That one to me has always looked like a yield trap. Let's see. What's up, Greystone? Good to see you. Ooh, Pat, there you go. Fine. Oh, look at this. Finally hit 20K plus in estimated yearly dividend. That is crazy. Good job. Hassan's here. Cool. What's up, Hassan? Sir Dude Bro Man, what's happening? Oh, nice. So Div, this is your first time in the stream. Welcome. I'm looking at the camera still. Welcome to the stream. I'm happy to have you here. And I hope you enjoy the live stream. Usually it runs for an hour. We'll go a little bit longer tonight. Maybe we'll go till about 6:15 or so tonight. But anyway, Charles, congratulations on the promotion. That's incredible. That's great. Let's see. Oh, nice. Justin. Justin's a first timer as well. Justin, cheers. And Stray, cheers to you as well. Thank you guys for tuning in tonight. Let's see. Ooh, Fast Eddie opened my first brokerage account in drinking water. Nice. Good stuff. Let's see. Ooh. Let's see. All right. Let's see if I can get this one. Sudhendu Agarwal. Did I get that? Let me know if I got your name right there. I think I did. I feel pretty good about that one. Surendu. All right. Let's see where I think I missed. Let's see. Rye. Where's Rye at? I think I missed something about him picking up some SDHD. Let me scroll up here. I do not see it. Shoot. All right. So let's keep going. Zal, is this real or are you trolling? And if you're not trolling, what's the story with this? What's the tale behind the hashtag? I'm curious to know. Ooh, this is an interesting question. So, what do you think about buying physical silver? Well, truth be told, it's not an area that I'm very well versed in at all, but I have always liked the idea of having a small collection of physical precious metals. I think it'd be cool to have a little safe, filled with some gold and silver and stuff like that. Maybe not the most practical and definitely not the most liquid, but I think that'd be kind of a fun thing to collect. And obviously, you probably will make some money on it. So it's not like I don't think you'd lose money on doing that, but will there be better returns elsewhere? I would imagine so, but I think the idea is fun. So that's my take on it. Let's see. Tyler, first time catching a live from the UK. Welcome, my friend. Cool. Shamir's classic, man. Classic. Sipping on a Coke Zero from McDonald's. Had a quarter pounder with cheese. Standing in solidarity with that great burger. Nice. Oh, yeah, man. There you go. Drinking a little rye. Bought some Hormel. A couple ETFs. Good job. Okay, this seems like a good move. Consolidated more and spent some extra money, overtime money, nice, on SCHD and JetQ on top of the weekly contributions. Also about to sell a penny stock for a profit to put into the portfolio. Good job, man. Good for you. Okay, I'm a little bit behind in the chat, guys. I'm 10 minutes behind, so I'm going to try and catch up. Div said, that's crazy. 52K in dividends per year. Good job. Good job. You are killing it. Like Striper said, you're killing it. Did I miss something from Pat? Oh, no, I said it. It was the 20K in dividends. Okay. Okay, let's keep going. McVeigh, what's happening? Tony, what's going on? David, good to see you. B Hall, what's happening, guys? What is going on? I said, hey, what's going on? Okay, nice. Matt says, I guess I have one personal milestone this week. I took my last military fitness test prior to retirement after 20 years. Crushed it with no mercy. No surprise, my friend. No surprise that you crushed it. And congratulations on a long and successful career, and more than anything, congratulations on retirement. That's unbelievable, man. Good job. That's huge. Okay. Adam Kahn, what's up, Adam? Good to see you, man. We need to get together sometime soon. It's been too long. So yeah, we should get something on the books. Oh, okay. That's your gamer tag from 2005. My name is Patrick. Nice. Okay, Patrick. Thanks, man. Thanks for the clarification. I'm trying to remember what my gamer tag was. I honestly don't remember. I do not remember. I can't tell you how many hours I spent playing Halo growing up. Halo and Call of Duty. Loved it. Grand Theft Auto was always it still is. It's my favorite video game. I don't play video games anymore. But Grand Theft Auto was always my favorite, but I really didn't enjoy playing online. But Halo was my jam. Call of Duty was my jam. Trying to remember what else I played online. I think those were the two big ones. What's up, Steve? How you doing? Good to see you. Brian, good to see you as well. Nice, David. Sold all AG&C dividend trap at high profit before the drop today. Nice. That's a good move. AG&C, I think, is one of the most, probably one of the most glaring examples. Oh, excuse me. Sorry. Probably one of the most glaring examples of a yield trap. So I support the sale there. Let's see. Icon. Okay. Carl Icon. There we go. Oh, yeah. Tesla's been an interesting one. I mean, it always is. It always kind of dances around. But yeah, 20% plus gains. Nice. Jeff, what's up, Bubba? Good to see you, man. Hope you're doing well. Who else we got? Okay, Scott. Great Scott. Critical Mass. Second time joining. Good to see you. Yeah, a lot of newbies tonight. It's good. It's cool. I love it. I love seeing new people, and I love seeing new people in the stream, and I love seeing all of you usual suspects as well. I'm fortunate that you guys tune into this. I really am. I appreciate it so much. 114 episodes in, and we're still going strong. It's really cool. So, oh, Justin says, been in the Discord for a while now, but never attended a happy hour. Glad to be here. Okay. Cool. Well, thanks for checking out the Discord. And if you guys are not already in the Discord group, definitely join. It's free to join. There's a link to it in the description. I think at this point, we're getting close to like 3,400 members in the Discord group. And it's basically just one big group chat, kind of, really not unlike this live chat here, except it's a bit, there's categories, it's a bit more organized and compartmentalized, but the conversations are. But yeah, it's free to join. It's basically just one big group chat, tons of investors over there. talking dividend stocks all day, every day, all night. And it's a cool place to be. So yeah, definitely check out the Discord group. Once again, there's a link in the description. Okay. Let's see. That's funny, Zal. This right here made me laugh. I thought it was Indian. It looked Indian to me. Maybe it's well, yeah. I did give a little Japanese pronunciation, but I think the name. I think he might be Indian. Looks like an Indian name from what I've seen. I grew up. The my hometown is actually majority Indian people. Yuba City, California. So I grew up with a lot of Indian friends and um, have seen a lot of Indian names, so you kind of learn how to pronounce them. I hope I got his name right. I think I'm close if I'm not 100% on, but I think I'm there. So let's see. Oh, okay. Zal. I thought you might be trolling there, so let's see. Let's keep going. Talking about silver there. Ooh, okay, Reese, could you please do a review on ABR? Did my own research, and I personally think it's a valid dividend stock, but some people think it's a yield trap. Yeah, we'll take a look at ABR. I do have some thoughts on that. I've actually, maybe it was you, Reese, or maybe it was someone else, but man, I feel like I've been getting so many questions about ABR specifically lately these last couple of days, and I'm not entirely sure what prompted it. But yeah, we'll take a look at it here in just a moment. I'm actually going to save this comment so I can refer back to it in just a moment. I want to get caught up here in the chat. I'm almost there. I'm almost there. So that's funny, Zal. The most noteworthy thing I've ever done is being, yeah. Zal, man, so fun fact, guys, Zal, I'm sure a lot of you guys here in the stream in the chat um are like this, but man, Zal has been a ride or die since the very beginning. And for him and for all of you guys who've been like that, or just really all of you guys, once again, who just keep tuning in to hear my gibberish, I am forever grateful. And I know I've said it probably like 5 different times already tonight, so I'll knock it off. But I do like to reiterate that because I feel very strongly about it. So, oh yeah, really appreciate everyone sharing what they bought, but we never hear what you bought. So, what did you buy this week? So, I picked up some more Clear Secure, ticker symbol U. And maybe we can take a look at that one here tonight as well, just to look at some of the metrics, just so you guys can see what we're rocking with here. But Emil, great question. I'm gonna save that as well because I was thinking about that earlier today. I'll come back to it. Okay. Let's keep going here. Steve, thank you for the compliment as well. Okay, I'm officially caught up in the chat. So let's go over to some of these saved comments. We're going to start here with Reese once again, going back to ABR. So Reese wants us to do a review on ABR, and we are going to take a look at this stock over on Snapstock, which, as you guys know, is well, maybe you don't know, but in case you don't know, this is a stock analysis platform I've developed. We just rolled it out earlier this month, so it's very new. Constant work in progress. Got a lot of cool things coming up for Snapstock, and I'm very excited about it. But this is my my stock analysis platform, and if you want to check it out, there's a link to this in the description of the video, where you can get some more information. You can get access to Snapstock by becoming a member of the investment club, but there's more info on that in the description. So over here, looking at ABR, just a little overview of this company. This is a mortgage REIT. It's different from a typical REIT, where a typical REIT invests in, actual physical real estate. Mortgage REITs will they'll buy up the mortgages and invest in the mortgages. So with that, there tends to be a bit more risk involved. And from what I've seen, there aren't very many mortgage REITs that, in my opinion, are worth putting your money into. In fact, most of them look a lot like yield traps. And before we continue on with ABR, I want to expand on this just a little bit because I've got quite a few. I've got quite a few MREITs over here on my list of certified yield traps. So I believe AGNC is a mortgage REIT as well. Let me confirm that because I could be mistaken, but I'm pretty sure it's a mortgage REIT. So yeah, AGNC is a mortgage REIT. And I won't give you a ton of examples, but this one, like I said earlier, is probably one of the most glaring examples of a yield trap. And a lot of the mortgage REITs you'll come across, at least the ones that I've seen, look very similar to this right here. A lot of them have dividend histories that pretty much look like this, where over time that dividend per share is being reduced. And AGNC, they've done good since 2020. I will give them that. It's been, they haven't cut it since then. But prior, they have a tendency to reduce their dividends over time. Another one is ORC, Orchid Island Capital. I don't remember if this is a mortgage REIT or not. I think it is, though. Yeah, so this is another mortgage REIT, and I think this potentially could be an even bigger yield trap while we're here. Yeah, so look at this. So this is basically, you want to avoid stocks that have dividend histories like this at all costs. There's nothing good about investing in this right here. Why would you want to buy something that's taken its dividend per share from 90 cents down to 70, then down to 45, then 40, and then all the way down to 12? This is not what you want. No matter how high the dividend yield is, this is not what you want. But with that said, going back to ABR, I think this one kind of bucks the trend of a lot of mortgage REITs. This one actually has some pretty decent consistency in the dividend department. Now, here it says 4 years of dividend growth. I think it's been longer. I think they've grown their dividend actually for 10 or 11 years. And it's nice. They're actually, doing pretty well in terms of growing the revenue. And yeah, look at the dividend stats here. So this one is a high yielding stock. In the trailing 12 months, yields at 13.5%. I think the forward yield is a bit lower, maybe 11 or 12%. But they've been a really solid dividend grower, and like I said, I don't know why it says 4 up here. I think that's an issue with the data provider, but we can see they have a very consistent dividend growth history going back the last 10 years. And, the dividend growth rate's actually not been bad. Over the last 5 years, 10.2%. So with this, you're getting a 5-year average yield of 9.3%. Right now, the yield is a bit higher than that. So, that's good to see. And you're also getting a really high dividend growth rate considering what the yield is. So this one's kind of a bit of a unicorn. And like I said, so far, this one seems to be a decent one. And the share price return's not been bad in the last year either, up 36%. That's pretty dang solid. So, yeah, I think there's some merit to Arbor Realty Trust, ABR, and I wouldn't say that for pretty much any other mortgage REIT that I've come across. So I think if you're going to invest in a mortgage REIT, this one seems like the best one. But considering what we just looked at, that doesn't necessarily mean you should go out and buy it. I think there's definitely a lot to this company that I didn't cover or skimmed over. So definitely dive into it a lot deeper. Because truth be told, when it comes to analyzing these, I'm not entirely sure what to look for. But I do know this one, as opposed to other ones, has a much better dividend history. So I think that was, that's a thumbs up for them there. So anyway, thank you for bringing that one up, Reese. And like I said, I don't know why, but I've been getting a lot of comments these last couple of days specifically about ABR. So let me scroll up here in the chat, though. I'm a little bit behind. I see some comments here. Yes, Pat, I agree. Let's get to 100 likes, guys. I don't know how many we're at right now. You guys will have to let me know. But if you haven't hit the thumbs up on that video, one time for me. One time. Okay, let's see. There was something said about Clear Secure, so I want to find that before we jump over to the next saved comment here. Yeah, okay, so did you sell Coca-Cola and Apple? Let me save this one as well. Short answer is yes. Well, I don't need to revisit it. Yeah, I sold both of those, locked those in for a gain. Did pretty well with both of those, so. Yeah, Shannon, okay. When I flew out to San Antonio, Clear was offering a free trial for checking in for security at the Atlanta airport. It is up and coming. Yeah. So when I was flying recently, earlier this month, and landing back into Vegas, I we were walking through to, like, baggage claim, and we saw the Clear, kiosks or whatever right by the check-in there, and they're hustling, man. I saw so many I saw, like, a handful of salespeople, like, right there, right where the kiosks are, but then as you kind of, like, meander around the airport, there are salespeople there as well, just grabbing people, randomly grabbing people, asking them if they want to, if they're checking in, wanna get ahead of the line or wanna try out Clear, and so they actually have people who are going around taking people from wherever they're at to Clear, just kinda pulling them out of the crowd, and I saw I stood and watched for just a couple of minutes, and, I saw them grab just in a couple of minutes. I saw a few people, want to. I saw them successfully grab a few people and bring them over to the kiosk, so make a couple sales there. So that was cool to see. I do think it's up and coming. The financials look really good. This company so far is like crushing it with the free cash flow. So I'm interested to see what becomes of this one. But if it keeps going like it has been, I think it'll turn out to be a really good investment. So, but yeah, Shannon, thank you for that insight there. Boots on the ground. Okay, is JepQ worth it? We'll save this one. This could be a good question, so we'll save that one. Oh, Matt, do you have any updates for when you and Russ will do a live stream again? No, I don't. I actually haven't really talked to Russ that much this week. But yeah, maybe I'll text him and see if he's around next week or something to do a stream, because I think that'd be fun. I haven't I haven't done a stream with him for a while, too long. And we haven't really been texting this week, either. Usually we're texting like every day, but it's been quiet. He's probably mad at me. Don't you think? It's got to be what it is. Oh man. Good question for you when I quit. I'll circle back to that one. Oh, Nico, good question on Pfizer too. We'll take a look at that. Kevin Burgess. What's up, Kevin? Thoughts on ELV? We'll take a look at that one too in Snapstock, because I know that's the one you just added. Oh man. Here we go. Oh my gosh, mean Maddie Dean. Here it goes, guys. Been getting a few of these trolls in the streams these last couple weeks. I don't know what's happening there. But anyway, let's go back to Emil. So, would you consider selling your stocks to pay off your house early at some point? That's a good question. So, like I said, I was kind of, I don't even know why I was thinking about it, but I was thinking about this earlier today. And on one hand, I really like the idea of not having a mortgage. That would be like a huge weight off of the shoulders. You know what I'm saying? Just to not have to worry about spending that extra couple of grand every month. And so I really like the idea of paying off the mortgage, but at the same time, I just don't know if it would be worth it to, like, for example, liquidate the portfolio and put that towards paying down the mortgage. I don't know. It's something I struggle with, and I ultimately do not think that I would do that. Unless at this point in time, I don't think it's something that I would do. I would be much more inclined to slowly chip away at the mortgage, though, pay a little bit above the minimum payment, because I think, that'll help save time save time and money spent on interest and stuff down the road. So that is something that I'm considering doing, but also at the end of the day, never say never. I don't know, but at this point in time, selling stocks to pay off the house early it doesn't seem like it's in the cards. I've really worked hard to build up this portfolio to where it's at, and we're not even at 100K yet, but it would, and maybe it wouldn't technically be that, but it would, yeah, I guess it would. It would feel like I'd be starting all over, and I'm just not sure ultimately that's something I want to do. So, but once again, never say never. We'll see. We'll see what the future holds. JJ Buckner will, because he lived mortgage free. I don't think he does anymore. could be wrong, but there was a period of time where he lived mortgage free, quite a long time where he was. And he would put out videos from time to time talking about that. And it always just made me want to, God, just I want that. That seems like so cool. And so I don't know. The idea is fun. Long story short, the idea is fun. We'll see. We'll see down the road. But for now, going to keep on investing. Now Gerard or Rafaela says, "Is JEPQ worth it? I started investing in JEPQ this month." So JEPQ, let's take a look. Let's go back over to the screen. We're actually going to jump over to. Hold on, guys. Whoa. Is it 4? There we go. Okay. We're going to jump back over to Seeking Alpha. Let's look at JEPQ. So I personally, and I keep in mind, Rafaela and Gerard, I don't know anything about your situation. I don't know how old you guys are, what your portfolio looks like, what your investment time horizon is. But personally speaking, I choose not to invest in covered call ETFs. I personally prefer to invest in companies whose income is whose cash flow, the cash flow that they spit out, is derived from its operational performance. To me, that's more straightforward. I feel more comfortable doing that. But when you look at something like JEPQ, which I think has been around since 2020 or 2021, I mean, obviously you get that 9.5% yield. That's looking pretty good. Interestingly, so far it has outperformed the S&P 500 when you look at the total return since its inception. So historically, it's been a pretty solid performer, right? So in less than 3 years, it looks like JEPQ came onto the market here May 4th, 2022. So it's been about 2.5 years. In that time, it's outperformed the S&P by 14%, 14.5%. So far, it's done pretty well. Whether or not that outperformance will continue, I'm not sure. But when it comes to covered call ETFs in general, I do think that JEPI and JEPQ are some of the more premier options. I would much prefer to see that in a portfolio than I would something like TSLY or any of the yield max type funds. You know what I'm saying? So yeah, good question, and I hope that answers it there. But yeah, let's go over to You Win, I Quit. Is investing the same thing as gambling? Just says I have a lot. So let's just stick to that first question. Is investing the same thing as gambling? No, it's not. It's not. Buying stocks can be similar to gambling. Like if you approach it from a place of speculation, and yeah, if you approach it from a place of speculation and only look at stocks as these things that go up and down instead of slivers of actual living, breathing businesses, then I think it is a bit closer to gambling than if you study a company, take time to understand what it does, how they make money, why their customers choose to spend money with them, come to understand the financials, the risks, the competitive advantages. I think the more that you lean into that, the less that it is akin to gambling. I think that's really where it becomes more investing. But with both, there's obviously risk involved, there's probability involved. And I guess at the end of the day, any decision that you make in your portfolio is a bet. You're making a bet, educated or not, but you're making a bet on the future outcome of whatever the decision you're making, whether you're buying a stock, selling it, or holding it. You're making a bet in some way, shape, or form. So I guess in that sense, it can be kind of a gamble, especially considering the future's uncertain. So yeah, I kind of just went in a little bit of a circle there and a little bit of a contradiction, but it's a tough question to answer. I don't think it's a tough question to answer, but hopefully I'm going to wrap it up there, because if I don't, I'm just going to keep rambling. So hopefully that made sense and was able to offer some clarity there. So but Nico, would love to hear your thoughts on Pfizer. I was building up a position, but the financials seem to be deteriorating. Yeah. And, I feel like we get on the topic of Pfizer. Here we go. Right there. I feel like we talk about Pfizer pretty often in these live streams. Once every couple or once every few live streams, it'll get brought up. But here's where we're looking at with Pfizer. So let's see, what's the performance been? It's been flat this year, I guess. Um, so let's go down real quick because I agree. The financials do seem to be deteriorating, and the PE ratio has gone up quite a bit. But the reason the PE has gone up so much, the price to free cash flow has gone up so much, and the free cash flow yield has gone down so much to negative territory is because the financials are deteriorating. So when we look at the revenue, they obviously had some good years between 2020 to 2022 were good years for Pfizer in terms of generating sales. But since then, it's, they've clearly dropped back off. And in this time too, like the share price, if we scroll back up, the share price really popped. Okay. It went up to over $50 a share, $51.50 per share or so at its peak. And that would have been right around when they were doing this type of sales. But post pandemic, now that people aren't rushing to get their vaccines, that really impacted Pfizer negatively. And now their sales are kind of going back to homeostasis. It's kind of reverting back to the mean, to where it was before the pandemic. And when you look at the trend, like if we subtract 2021 and 2022, when we look at the overall trend on Pfizer's sales, it's been pretty flat. So the sales have been pretty stagnant. And at some point, like it's unless they can become more profitable over time, kind of like an Altria group who's still increasing their free cash flow and increasing their earnings because they're just doing better cutting costs. Unless a company is able to do that, then this type of stagnation is going to impact all the other aspects of the business, and the investment. It's going to impact the share price. It's going to impact the dividend, and I think we'll see that with Pfizer. So continuing on though, earnings have kind of been all over the place. These were the good years right here, but 2017 to 2019 were bad, but otherwise this earnings per share is kind of trending down if we subtract 2021 and 2022. So I don't think that's a great sign, especially if you look at 2017 to the trailing 12 months, subtracting these 2 years right here. Let's exclude the pandemic years. This trend is down. If not for the pandemic, it's possible that these years would have been down as well. Possible. We don't know. Obviously, we'll never know. So that's just not how it played out, but it's possible. Now, jumping over to the free cash flow, this is a pretty identical chart to the revenue, actually. This looks pretty much identical. Now, the unfortunate thing about the free cash flow is that now in the trailing 12 months, it's dipped into negative territory. So that's not a great sign. And furthermore, if we scroll down looking at the profitability metrics, the gross margin, the net income margin, the free cash flow margin, that seems to be deteriorating as well. This is not a good sign. This is going down over time. Still, I mean, the gross profit margin, 54%. That's not bad, but that's actually a pretty decent gross profit margin, but it pales in comparison to what they were doing. Prior to 2020, they had some really strong margins, very strong. Same with the net income margin. 2023, in the trailing 12 months, it really dropped off a cliff compared to what it was doing before. Excuse me, guys. Sorry about that. And looking at the free cash flow margin since 2021, it's been rough. And now because the free cash flow per share is negative, the free cash flow margin is negative as well. And while all this is going on, the company's really dramatically increased their debt. It's actually doubled. Look at this. It's more than doubled, actually. 2022, $34.5 billion net debt. 2023, 72.2. So they took on a lot of debt, taking the net debt to free cash flow from a really good position, only 1.3 to 15. That's not great. And as far as the dividend stats go, I mean, the dividend's still intact. But it's getting a bit concerning. You got a decently high starting yield, over 5%. That's a good yield. And historically, Pfizer has been a good dividend grower. At least over the last 10 years, they've grown that dividend. And, in the early teens or early to mid-teens, it wasn't bad dividend growth. We were getting around 8%. But looking at this trend, it's been pretty poor. It's been pretty lackluster. And so, in a way, I think just looking at the other financials, we have all the reason to believe that will continue. So, yeah, and then the payout ratios, I mean, these kind of speak for themselves, So, overall, I'd be a bit wary of investing in Pfizer right now. But I'd be curious to know too in the chat if you guys have any, what's the bull case for it, I guess? Like, is the worst behind it? And maybe from here things will be good? What do you guys think? Let me know in the chat here. But anyway, now jumping over to Kevin. Thoughts on ELV while we're here. Let's take a look. So ELV is Elevance Health. And Kevin just recently started a position in this one. A couple weeks ago, I think. This is Kevin's newest position. And man, look at this. So it's really jumped off a cliff. I mean, year to date, it's down 10.6%. In the last month, it's seen a crazy drop. So, and Kevin, did you start your position before? Did you start it like here or did you start it down here? I'm thinking maybe it was probably right after, right? Because I think your stream was on Monday. Yeah, what did you do? Did you start the position on Monday or when did you start this bad boy? But anyway, continuing on. Let's keep looking at it. So, let's just scroll down, look at the financials for Elevance Health. And real quick, guys, just a little bit about this company. I believe they're a health insurance company, health benefits company. Yeah. Okay. So health benefits. And looking at the stats, I mean, the growth stuff, revenue's growing at a pretty nice clip, 13.25% over the last 5 years on average. Earnings per share is looking really good as well. That's a work of art, actually. That looks really good. Free cash flow per share is trending up and to the right as well. So all of that's looking really good. This company is becoming more profitable over time. The gross margins have gone from 19.8% to 28%. So, they've jumped almost 10% just in the last 7 years. So that's really good. Net margins have been steady. Free cash flow margin for the most part has been steady. This has gone down a little bit since 2020, some since 2020. So that's something, but doesn't seem to be too dire. Net debt to free cash flow still looking really good. 2.75. That's good. Very solid dividend growth stock. Very solid. So the yield looks like it's a little bit above the average. The average yield is 1.1, 1.25 in the trailing 12 months. Nice dividend growth rate, both in the 5 and 10 year, 16.65%, 15%. Looking really good. Payout ratio. So this is one thing to keep an eye on, perhaps. The payout ratio since 2021 over these last few years has been on the up and up. However, it's far from being at a level where it's concerning. I mean, it's peaked at 28% in the trailing 12 months. That's nothing. So yeah, definitely wouldn't worry about it. And I don't need to tell you that, Kevin, you know that. Free cash flow per share looks like it's seeing a similar trend, but same story. It's actually the free cash flow. Did I say free cash flow per share? Free cash flow payout ratio is actually lower in the trailing 12 months than the earnings payout ratio. And you'll see that from time to time with companies where their free cash flow payout ratio, and it looks like this is a trend with this company, free cash flow payout ratio is lower than the earnings payout ratio. So yeah, decent returns on equity, pretty decent, okay returns on invested capital, double digits. So yeah, I think it's just looking at the snap stock stuff, it looks pretty decent. So yeah, I mean, and if you were going to buy this one now with this crazy drop in the last month, now doesn't seem to be a bad time to start a position. And as we can see, it's not too far off there from its 52-week low. So yeah, looks pretty decent. Okay, we have one more saved comment, then I'll get back to the chat. I'm missing 93 messages right now. So I'll catch up though in just a moment. So this last one saved is from DG Weekly. When do dividends become more worthwhile than growth? So you have $550 or $500 per month to invest. I think that's going to be a tough question to answer. Let me think about it for just another second. Yeah, I don't know. I don't know if there becomes a point where one becomes more worthwhile than the other. I think to a degree it's preferential. And if at the end of the day, it is all about the total returns, which adds together share price performance and dividend income, I think that you need to decide, like, how you want to divvy that up. How much of your total returns do you want coming from dividend income versus share price returns? You know what I'm saying? The more that the more that it comes from share price returns across time, the more likely you will have to be to probably trim some of your positions down the road when it comes to being ready to retire. Potentially, it depends on a myriad of factors. I'm kind of thinking out loud as I'm answering this question, so I probably should give this more thought. But my knee jerk reaction is that it doesn't become more one doesn't become more worthwhile than the other, and the two. This is probably the answer I should have gone with. The two are really not mutually exclusive. You can invest in companies. There's plenty of them out there that offer dividends while simultaneously offer over time, ample share price performance and therefore solid total returns. And those type of companies are going to be like the dividend growth stocks. If a company is an aggressive dividend grower and is able to sustain that, then over time, it will. Let me before I get to the conclusion, the only way that a company can consistently grow its dividend is if it's consistently able to grow its earnings and its free cash flow. Okay, so if a company is able to do that and continue growing the dividends, well, those are also the same things that over time should push the share price up. And so, like I said, overall, it's not one or the other. You can have both. And I know personally speaking for me, like those are typically the type of companies I tend to go for, the ones that are growing their sales and their earnings and their free cash flow. Those are the ones I shoot to own. And I do so in the hopes that I'll be able to get, generous total returns from those. So, yeah, that was a tough question, but hopefully that made sense. All right, let's go jump over to the chat. See what I missed here. Okay. Okay. Got it. Going back to Pfizer. Okay, Kevin, nice. You added to Elevance on the drop. Cool. This is a great question, actually. I'm really glad that you brought this up. So, what's your screening process that helped you find you? So, actually, I found out about this company from Russ. He put out a video where he was talking about some, I don't remember what the video was, but he mentioned it in a video. And I had heard of this company. I was very familiar with the company, but I didn't know they were publicly traded. And the more that I looked into it, like as soon as I found out about it in his video, I spent the rest of the night just diving into it and some time after that as well. And the more that I learned about this one, the more that I liked it. So I just kind of, I found out about it through him, but I kind of want to zoom out and approach that question or just kind of reword that question. Like, what's the screening process that helps me find any stocks? And truth be told, I don't really have one. I really don't have one. I these days they just kind of come randomly sometimes. Sometimes you'll be out and about and you'll stumble across something that'll make you think of a certain company, and those are my favorites too, just when they randomly hit you like that, when you see something in your real life and it turns out to be a good investment. But sometimes I'll use a screener too. Not very often. I actually couldn't tell you the last time I messed with a screener, but sometimes I'll do that. I get ideas for stocks from watching other people's videos or reading articles on Seeking Alpha. There's so many different ways, or even just through reading books. There's so many different ways to find stocks, but it's been fun. I would say some of my favorite ways to find them is when they just kind of like randomly fall into your lap, or when you're not actively looking for them. I think that tends to be the most fun way to go about them when you're not expecting it. So Yeah, I agree. Let's get this guy out of here. Don't know what his deal is. All right. Let's keep going. McVeigh, what was your question? Oh. Hmm. Did the DOJ suit make you think twice about Visa at all? No, definitely not. Yeah, I did. I I, I don't think at all that's going to be something that's going to be a long-term detriment to Visa. In the same way that I don't think like the E. coli outbreak at McDonald's is going to be a long-term issue for them as well. So I kind of look at them in a similar way. So yeah, it doesn't. It's not really something I stressed about. So. Oh, thoughts on IBM? That's a good question. And by the way, guys, it's top of the hour. We'll go for another probably 10, 15 minutes or so. So, but yeah, thoughts on IBM. Now, let me just start this off by saying, like, I couldn't tell you the last time I looked at this company. I don't really spend any time paying attention to IBM. They've had a nice run up this year, though. I'll give them that. But the last time that I really looked into IBM, I was not impressed with their financials, and I think it's been a while since I've looked at them, but I think I'm going to feel the same way here. So, yeah, this isn't what I'd want to see. I mean, revenue's trending down over the last 5 and 10 years. Looks like it's making its way up. From 2021 to today, it's making its way back up. Earnings per share has been not great at all. It's definitely trended down. They've had some big jumps and some big dips, but generally it's trending down over the last decade. Free cash flow per share has been pretty. This has been the most consistent out of all these growth metrics, but these are a bit concerning to me. I do like to see that they're increasing their net margins. So since 2020, that looks like those have jumped. Um, the net profit margin or the net income margin has gone down. So that is concerning. And I mean, this is a pretty identical trend to just the earnings per share. So what else can we look at? I mean, I will say too, like the net debt to free cash flow is not too bad. I don't know why it's not showing the trailing 12 months, but 3.86 in 2023, that's really not a bad net debt to free cash flow. So not bad at all. Means it would take them about, almost 4 years to pay off all of their net debt if they contributed all of their free cash flow in this year to paying it down. It would take about 4 years, and that's not too bad. So, man, that dividend growth is really wow. Yeah, that dividend growth has really come down. Oh, yeah, anyway. Oh, and the last thing, sorry. Free cash flow, I was spacing out for a sec. Free cash flow payout ratio has gone up over the years too. That's also not the best sign. But in general, yeah, I don't see much just looking at the financials. I don't see much that they really interest me. Let me show you guys, because we've talked about it a little bit. Let me show you Clear Secure. And I did a video on this. I'm sure some of you guys have seen the video, but I did a video on this company earlier this month. Just kind of going through all the details. Hi, buddy. But let me show you what's going on with it. So revenue growth has been tremendous, tremendous. And the thing about this company, they only came onto the market. What are you doing? They've hold on a sec, guys. 1 second. Here. There you go. There you go. He likes to look out the window. So I was just lifting the blinds. But they've only been public since 2021. Now, one thing about this company, because they are on the younger side, they only recently became profitable. It's only been since last year that they, delivered positive net income. Free cash flow is a different story, though. They've been free cash flow positive since 2021, and that growth is juicy. This is pure class right here, guys. Decent margins, about 60% so far. sometimes upwards of 70%. So yeah, decent margins here. Net income margin, we'll see where it goes from here. I mean, like I said, they just became profitable. So hopefully this continues trending up over time. The free cash flow margin is looking great. Okay, almost 40%. Really no debt to speak of. I mean, in the trailing 12 months, it says 70 million, but as of their most recent earnings report, they actually have no outstanding debt. So that's a huge green flag to me. I'm a sucker for a company that has um, no outstanding debt. It's just one less thing you have to worry about. So I was happy to see this company with that. So far the dividend growth has been great. 2022, they paid 25 cents. Last year in trailing 12 months, it's a bit higher, and they pay special dividends as well. So as we saw up here, the dividend yield in the trailing 12 months was 70%, or 7%, excuse me. But I do believe that takes into account the special dividends. Otherwise, without those, I think this is a closer yield to the reality. And actually, if we go over to my dividend portfolio tracking spreadsheet here, this has the yield at 1.1%. So pretty similar to what we're seeing here on Snapstock. So nice returns too. I mean, some of them have been negative because they've been, they just recently turned a profit, but nice return on equity in the trailing 12 months, nice return on invested capital. And, I'm hoping that continues. So yeah, I think this company, and I didn't really address the payout ratios. This is a bit wonky. This is looking to be in good shape. And, I'm really not, this is my first time investing in a company like this that is so early on in the life cycle. I've never invested in a company that like this that kind of just became profitable. So I think this will be an interesting experiment. And I'm interested to see where it goes, but I think it has a lot of the makings to be a great dividend growth stock moving forward. Um, so yeah, I'm looking forward to see what happens with it. Okay, go a few more minutes. A few more minutes, or I'm a few minutes behind in the chat here. Buddy, what is it? You guys hear me? I don't know if you can hear him meowing back there. Come here, buddy. Hi. Come here. See if we can get him up here. Oh, what are you doing? Okay. Yeah, all of you guys who are dipping out, thank you so much for tuning in. I appreciate you guys hanging out tonight. And once again, I apologize for kind of the delayed start, but it is what it is. I'll get it squared away next week. Cool. I am caught up in the chat. What else can I show you guys? I feel like there was something else I was gonna show you guys. What? Oh, he wants to go in the closet now. One sec. Here. You're crazy. Jeez. Oh my goodness. Okay, so Mike, I'm going all in on Tesla with my $350,000. I missed out on the gains from the last couple of years just sitting in cash when VTI was at 195. I hate myself, so I'm going to make it back by going all in on Tesla. Well, my friend, you do what you think is best, but my initial response to that is that it seems like you are making an emotional move. That's a lot of money. That's a lot of money to be putting into one company, especially one company that is so flippant, so volatile, that is so driven by momentum and hype. And like I said, you got to do Peanut, stop. You've got to do what you think is best in your portfolio, but please sleep on that move. And remember that at the end of the day, it's a marathon, not a sprint. So, but no matter what you do, I wish you the best of luck. But that's my take on the matter. So, Tony, quick thoughts on Ares Capital. Yeah, I think that's one of the better business development companies. I think that's like right up there with Main Street Capital Corporation. Just very quickly, I think as far as like the top BDCs go, the ones that I like, it's Main Street, Ares, I think Hercules Capital, from what I've seen, seems like a good one. And I also own, obviously, Blue Owl Capital Corporation. I've been very happy with that one as well. So, um, but yeah, I like Ares Capital. That's a great one. So, yeah. So going back to our conversation about investing versus gambling, this move that this Tesla move, seems a bit more akin to gambling. So than it does investing. So, but yeah, like I said, man, I wish you luck. You know what? If you do it, I hope that Tesla doubles for you. I hope it goes up another 20%. I really hope good things. So, JS, what about UPS? Yeah, that's one that I kind of I go back and forth on that one. Let's take a look at UPS though. Okay. And I probably need to spend a little bit more time, thinking about UPS versus FedEx versus DHL versus USPS versus Amazon. It seems like there's a handful of key players in this industry. One thing I will say for UPS though, it's been a great dividend stock. I mean, nice yield in the trailing 12 months, over 4%. Nice dividend growth CAGR as well, 15.5%. That's looking great. As far as the valuation, yeah, this is kind of interesting. So the PE and the price to free cash flow are pretty similar in the trailing 12 months. Both of them are below their 5-year average, the PE ratio, in a big way, which I guess is not, well, I don't know. The share price is about where it was, right? 2020. So that's kind of interesting. Um, yeah. So this is where it gets a bit sticky. Revenue for the most part was trending up, but then it's, kind of peaked here. So, but we'll see. Maybe 2023 is just an anomaly, and maybe it'll get back to growing in the years ahead. I don't know. We'll see. Earnings per share. This is concerning. The earnings per share is basically been cut in half just in the last couple of years. So, and there was a COVID rebound here. People spending that stimulus money still, buying things online. So they've definitely benefited from that. Um, let's see where the earnings per share shakes out though, because it does kind of like what we saw with Pfizer. It does kind of appear to be, reverting back to the mean, to the average, to what it was before. So let's see where it shakes out. Free cash flow per share, kind of similar to what we saw with earnings per share. Kind of interesting. This is a good sign. Like, margins are increasing. 2016 they were 9%. Trailing 12 months they were 19%. So a nice little 10% boost there. I'll take that. Net income margin, just based on what we saw with the earnings per share. Let me get a little bit closer. Sorry. Based on what we saw with the earnings per share, this is not all too surprising to see. Debt situation doesn't look too bad. Still 4.6 for the net debt to free cash flow. So that's not bad. The interest coverage has gone down a bit. So yeah, this may be something to look at. And the debt does seem to be trending up over time. Not that that's like a huge deal. That's probably normal. But so yeah, there's some good, there's some bad. But overall, I'd say I'm a bit lukewarm on UPS. I don't see. I guess generally, no matter even what the dividend stats are. Generally, with this company, I'm just kind of looking at it, thinking, I just don't. This doesn't really jump out to me. Is there's nothing really about this that jumps out to me, making me think, yeah, I think this would be a good investment. I mean, it's been a fine company, and what it does is certainly important, but I don't know. I think there's probably other investments out there, is even in this sector, that I would rather own. The thing it has going for it is the dividend stats, though. Like, as a dividend investor, this is pretty nice. A 4% yield and a double-digit growth rate. So that's nice. And another thing to consider, though, guys, is that this earnings payout ratio is actually looking problematic. So this is one thing that you need to to keep in the back of your mind when considering this company. Actually keep it at the forefront of your mind. This payout ratio has really trended up over the years, not just slightly either, like what we saw with Elevance Health, where it went from 13% to 15% to 17% to 20% or whatever it was. This has gone from 26% in 2021 to over 100% in the trailing 12 months. And the free cash flow payout ratio has trended in a similar direction as well. It's not as dire. I mean, 2023, the free cash flow payout ratio was over 100%, but it's come back down in the trailing 12 months to 66%. But yeah, in general though, there's not, this one doesn't really jump out to me. I would personally would pass on this one. So, but yeah, thank you for bringing that one up. It's been a while since I've looked at UPS. So, so guys, and I think that's going to be, I think this is probably a good place to wrap it up. I see a question about Estee Lauder. So I really wanted to like this company more, because I do like the industry. I do like the beauty industry and makeup and stuff like that. I think that's a pretty good industry to invest in. But Estee Lauder wasn't doing it for me. I like L'Oreal a lot more. The problem with L'Oreal, though, like LVMH, is that it's a French company, and so that adds a layer of complexity that may or may not be worth it. I don't really know. But I personally am not a fan of Estee Lauder at this point. I like the company. I don't like the stock. I don't like the financials. So that's one that I personally wouldn't invest in either. So, but yeah, guys, we are going to wrap it up here. This is a good place to end it. So 6:20, I think we went probably an hour. I guess we're an hour 13 minutes. But guys, on that note, thank you so much for hanging out with me, and thank you for tuning into another very fun live stream. What else can I tell you guys? Yeah, I appreciate all the support. It really means a lot. You guys are the bomb. This is the best community in the world, best gang here. I hope you guys have a great weekend. It'll be interesting to see what next week brings. Maybe some more red, kind of like this week. But yeah, otherwise, my friends, and all, I should have this video stuff. Not that it makes a big difference to you guys, I know, but I should have this video stuff dialed in next week. I don't know what happened. What's going to happen is I'll end this. I'm going to end this. I'm going to try it again, and it's going to work just magically. Watch. But anyway, guys, we're going to wrap it up there. Like Andrew here says, little salute to you guys. And if you haven't done so already, just a quick reminder, hit that thumbs up button for me one time. I'd appreciate it. And hope you all have a great weekend. And I will see you in the next one. Be sure to tune into Sunday's video. I got a great Q&A planned for you guys. I think this is going to be the best one yet. So tune into Sunday's video. I'm excited for it. I'll see you guys then. Take care.